Going to bring some business news on the programme now. Stephen is with us as ever at this time, starting with that meeting of oil-producing countries in Vienna.
And there's just one big question on the table at the meeting of the OPEC cartel of oil-producing nations, and that's how long they're going to extend a deal to cut oil production. The Organisation of Petroleum Exporting Countries, along with Russia, agreed last November to reduce supply levels in an effort to boost prices. That arrangement was meant to last until the end of June, but now looks almost certain to be prolonged for many months to come, as Martin Pollard now explains.
Keep production down to drive prices up. That's essentially what OPEC member countries look set to agree upon this Thursday. It follows a similar accord reached at the end of last year, which is due to expire at the end of June.
We're planning on a 9-month extension and to maintain the current production and the reductions that were planned for prior meetings.
The deal, reached last November, asked all 11 OPEC member countries and several other non-member countries, including Russia, to cut their output. Compliance with the accord has been variable, but enough has been done to push prices back up just above $50 a barrel. A 9-month extension is likely, but some are pushing for even bigger cuts over 12 months.
So we will see the third quarter effect on the cuts, and we will have other options to be discussed.
Analysts say member countries badly need higher prices to improve their revenues. But if they go too high, it could be a self-defeating strategy. That's because energy-hungry countries like India have been exploring alternatives to oil, including shale gas.
Well, let's take a look at how oil is trading as that meeting gets underway in Vienna. The international benchmark Brent crude up 0.8% at over $54 a barrel. Now that's almost $10 higher than before the OPEC deal was agreed last November. And remember, less than 18 months ago, we were looking at prices of less than $30 a barrel.
What about the stock markets then, Stephen? What's the latest there?
Lots of focus today on the minutes of the Federal Reserve meeting that were published on Wednesday, signalling the US Central Bank close to another interest rate hike at their next meeting in June. A quieter day on the stock markets in Europe today, in Paris and Frankfurt, at least. It's a public holiday here in France and also in Germany. Oil companies, though, are trading up as that OPEC meeting gets underway. Over in Asia, lots of cheer too over the Fed minutes as well. We had gains across all of the Asian markets. The Shanghai Composite and the Kospi and Seoul both seeing gains of over 1%.
Bit of cheer here in France as well, in fact. The latest last unemployment figures of François Hollande's presidency have shown a bit of an improvement, haven't they?
There was a drop of 1% in the number of people registered as jobless with the country's unemployment agency in April. There are still almost 3.5 million people on that live register. That's up over 500,000 in the 5 years that François Hollande was in office. These monthly figures became somewhat of a burden for the last government, as President Hollande had staked his time in office on bringing down unemployment. In a change of approach, the new Labour Minister, Muriel Pénicaud, says she won't be commenting on the jobless figures every month. In a statement, the ministry said that's because they don't best reflect the state of the labour market. Some more of the day's business headlines for you next. Mongolia has secured a bailout worth $5.5 billion. The International Monetary Fund signed off on the 3-year emergency funding package. It's contributing $434 million, with the rest coming from the World Bank, Japan, South Korea and other lenders. Mongolia's economy has been hard hit by the fall in commodity prices, as well as a drop in foreign investment. The Chinese PC maker Lenovo has returned to profit despite a fall in shipments in the year to the end of March. The firm lost its title as the world's biggest PC maker earlier this year to HP. Lenovo's revenues for the year fell by 4% to $43 billion. And car production in the UK dropped by 18% last month. The industry body SMMT says the decrease was partly down to the Easter bank holiday, but sales also fell by 20%. Industry experts also saying rising inflation is likely to have an impact on consumer demand.